So what drives the performance of RMBS? Or even, do house prices matter? So what are the facts? Even during the market volatility that we experienced in the second half of 2018 and the falling house prices, the values of GSIT's investments were rock solid. The portfolio has performed exactly as we forecasted, delivered you low volatility as well as a sustainable monthly income. So, what drives it? This raises the question when it comes to driving the performance of RMBS. There's two things. One, the affordability, which comes down to the mortgage rates. And secondly, the borrower's capacity to pay, his income. And we reference unemployment. Note, the correlation between the mortgage arrears, which is defined when a borrower has fallen behind on their mortgage repayments by more than 30 days, is very correlated to the cash rate. And also, it's overlaid by the unemployment rate on a declining trend. Earlier this year, the IMF supported this analysis by referencing in its stress test of the Australian major banks and came up with the conclusion that unemployment is the most important driver of the performance of home loans, i.e. it will drive if a borrower is coming in and out of default. So, house prices. Yes, they are important for the wealth effect and also the government benefits from boosting their coffers, but it's a second order impact on the borrower's capacity to pay their mortgage. Now, let's consider also the further benefits of the RMBS bonds. It is a defensive asset class whose inherent attributes allow us to derive low volatility returns. Also, historically, no Australian RMBS bond has ever defaulted. There's multiple layers of bondholder protection in these deals. This is also important, the skin in the game or the alignment of interest. That is where the lender would take the loss before the RMBS bondholder, i.e. the lender always takes the first dollar of loss. And now we're investing in a large institutional market, circa $114 billion, which is double the size of the corporate bond market. But it's key to understand the size and depth of the market. This size ensures that the RMBS bond market gets the attention of not just the domestic investors, but it also registers on the international scene. Now, ultimately, the GSIT investment is a unique opportunity for any investor looking for a defensive income strategy capable of delivering sustainable monthly income whilst generating the highest risk-adjusted returns consistent with the long-term preservation of capital for our investors.